Let's look at the foreign exchange markets now from sterling's point of view as we head into that day of voting for the UK's EU referendum. And of course, many now suggesting that if it's an exit, as we've heard from George Soros, we could well see potentially some 20% downside for sterling. Well, whether or not you agree with that, we now have a guest here in the studio talking to us a little bit about how he goes about the event from an analytical point of view. Leroy Lawrence from Quadron Capital. First of all, what is the setup you have at Quadron Capital? Because it's not a normal way of approaching the markets.
Sure. So we're based on algorithmic trading. We develop quantitative trading strategies and we allow them to run automated without too much interaction, except for turning them on and turning them off.
Right. How are you going to go into this referendum then?
We're going to not be involved. That's what we're not gamblers. When we're expecting really high volatility, as we're expecting on Thursday and Friday, we tend to switch off as soon as we can and return possibly the following week back to normality. As good as our algorithms are, they can't predict the elections.
There's an interesting point to pick up on there, that the trader has potential to cope with some large gaps in the market. Now, I know you have a history of being in the foreign exchange markets as a trader anyway, don't you? So the gaps are almost impossible to anticipate.
Sure. I think on the day we're going to see the market following the news as it's reported. So for each area of England that reports their local polling, you'll see the market react to that.
Okay, well let's take a look. You want to take a look at sterling against the US dollar. We're bringing up a monthly chart here, which you wanted to take a look at, and I've drawn a line here at the the 139.27 level. We're currently at 146.79. What are your words of wisdom on this?
Well, I think 1.47 is the safe spot at the moment. We've seen since Monday the market on cable rally upwards in relation to the poll of polls and YouGov seeing an increase in the Remain. YouGov have said that they actually are seeing a real change of sentiment in favour of Remain. The market is clearly seeing are expecting there to be a Remain vote, so they're betting on it right now. Not really highly, not into the 50s, but at 1.47, considering the fall we've had, it's a pretty strong sentiment from the market.
Yeah, well, I mean, 150, as you say, not too far away from where we are at the moment. But George Soros there, as I said, talking potentially downside of some 20%, which could take us well below where we are at the moment. And of course, it won't just be against the US dollar. I guess it'll be against a basket of currencies if we have an exit vote. How do you see the markets going? Because, I mean, if you're happy at these sort of levels at the moment for cable, if there is a fallout, will there be a quick snapback?
No, Soros seems quite dramatic with 20% fall, but against the dollar it will be further than that, I believe. I think the initial fallout will be around 20%, and then I think we have at least 4 years before we pull out of the EU, and probably 10 years of negotiations. I think that we'll see it fall towards parity, and then I think it will just sit flat for a very long time if we leave.
So the fundamental arguments in that favour, what else are you looking at?
Also looking at the Fed rate hike in the US, which was been held off during this last quarter because of the Brexit vote. That will follow very soon afterwards, and you'll see the US show impetus for a stronger economy in the US, which will mean they're against our currency, and our currency will fall heavily.
I suppose the counter-argument to that is the recent commentary from Janet Yellen talking about the potential concerns about a Brexit vote and the fact that they are potentially going to hold off interest rate rises if there is a vote to leave. The other side to this is, going back to November, I think it was Mark Carney, the Bank of England governor, saying the only stumbling block the UK has got in terms of higher growth is a strong pound. You get a weak pound, all of a sudden, it's party time, isn't it? In a way, but how much do we export? If we're exporters of manufacturing, that would be great for us, but we're not. We're exporters of service. So because we are, I think it's 80% of our market is based on service these days, we really need to be showing a stronger pound. And we're not going to get it.
No.
If we exit.
If we exit, yeah.
But if we stay, you're happy?
If we stay, we'll see a short-term rally. It won't go on for a long time. We'll see from 1.47 all the way up to maybe 1.52, maybe 1.56 if we have a big enough mandate from the voters. But it won't be as big a rally up as it will be a fall down.
Yeah. Okay. All right, Leroy. Thanks indeed for joining us. Give us insight as well into Quadron Capital. That is Leroy Lawrence, who is the founder and chief executive of Quadron Capital.